Ladies and gentlemen, on screen could be the biggest hidden gem for AI stocks. This is a stock that only has one analyst that is covering it. Citron Research, at this point legendary short selling firm, says that this could be the new AI darling on Wall Street. This is a newer company. In fact, it's an older company, but it was a Russian company that got delisted after the Russian war, has spun off, rebranded, no longer has any affiliation with Russia whatsoever. The founder is actually exiled from Russia. And it's now incorporated in Amsterdam, in Holland, in the Netherlands. So here in this video, I will share with you the biggest hidden gem in AI. In my opinion, we will go over earnings. We will go over the one price target that is currently on the stock, why I think Wall Street has not realized this yet, some big news that came out in the last 24 hours, and more. Finally, I will share with you my position in this stock. And last but not least, this is not a recommendation. AI stocks are highly speculative, and you can lose all of your money. Now, Nvidia invested $700 million into the company in December. This is kind of like a nod of approval that, again, a lot of Wall Street has not caught on yet. So if you lose a lot of money, Nvidia is going to lose a lot of money, and I think they do their due diligence when they invest in companies. But still, you could lose money. This is not a recommendation. I just think it's a massive opportunity. The stock listed on screen is Nebius Group. Now, this is a more recent chart of Nebius. They started trading again on October 21st. Okay, they were delisted from our markets back in early 2022, back in February, when the war broke out. That is because the New York Stock Exchange took all Russian companies off of our markets. And if you were a company that did 50% or more of your sales in Russia, you were also delisted. Now, I want to be very clear. This company is no longer affiliated nor do business in Russia. They take in 0 Russian rubles, which is the Russian currency. It's a different company. This used to be Yandex. Yandex is or was the Googles of Russia, right? This was one of the premier tech companies in Russia. Now, the co-founder of Yandex took this company, took it out of Russia, and spun it off. So it's essentially a brand new company. I think the reason they just spun off Yandex instead of create a whole new company to do this is to get relisted back on the markets without spending a whole bunch of money to do so. Kind of like a SPAC, but instead just taking the old company and, well, rebranding it. So I actually wrote this on X that actually got a lot of attention. So I felt like I should make a video about it to really share this before Wall Street picks up on it. Because truly, Wall Street has not picked up on this company yet. And when they do, I think the stock's going much higher. I write, for anyone looking for a potential hidden gem within AI stocks, I may have found one. Hard to find these days. I have consolidated lots of research. Enjoy. The stock again, Nebius Group, ticker symbol NBIS. The founder was a co-creator of Yandex, the Russian Google. He fled the country in 2022 with the war and founded Nebius, while really spun off Yandex into a new company, now Nebius. Again, no, they do not do business nor operate in Russia anymore. They were delisted in 2022 because over 50% of their revenue came from Russia. Again, now a totally separate company. Nebius recently got a $700 million investment from Nvidia. They operate data centers, but also have software that helps scale AI applications. I've been messing around in their Nebius studio, and it's interesting. And this is their Nebius AI studio. This is one of the, I guess, products that they offer. This is a newer thing, though. You could see I actually owe $1 from just messing around generating images from text to image. They have all of these different large language models in here, all kinds of different things. They have Llama, Quen, they have DeepSeek, all of the DeepSeek reiterations. So this is something that's newer. They just launched this. So we'll hear more about this when they report earnings on February 14th. They have zero debt and $2.2 billion in cash, which equals out to over $9 per share of cash on hand. So basically, the stock is trading for $33.29 today. They are debt-free, but if you strip out the cash that they have about $9 per share currently in just cash on their balance sheet. Okay, we'll talk about that more in just a second. Bernstein just named it as a best idea for 2025, saying it trades at a 50% lower multiple than its competition, CoreWeave. CoreWeave is a private company. They are expecting between $750 and $1 billion in 2025 of ARR, annual recurring revenue. The stock is valued at $7 billion, which makes its valuation a steal if you consider the $9 per share of cash they have on hand. It goes in to say here, their main data center, their supercomputer is in Finland, and they are adding additional GPU capability to that facility. They're also adding a new GPU cluster in Kansas City. Now you have Tolanka, located in the Netherlands. It specializes in data for AI development stages. Avride, based in Texas, focuses on autonomous vehicle technology. 1010, an EdTech platform located in Wyoming. Their consumer base is in the US, Europe, and the Middle East, with no business in Russia. Citron Research, legendary short report firm, also has said positive things about the company, saying it could be a potential AI Wall Street darling. They only have one analyst rating of a buy and a $51 price target. They are now a new company to get relisted, and it appears Wall Street en masse have not realized what they are doing here. Now, here's the post from Citron. Citron wrote on their Citron Research account, they say Citron is pounding the table that the NBIS is poised to be the next AI Wall Street darling, a sleeper with no analyst coverage yet. The market hasn't caught on to its massive potential, or its undervaluation versus CoreWeave. If it trades at a 50% discount to CoreWeave multiple, that puts NBIS at $60 at just a 50% discount. So full value, if it were to trade at full, multiple comparison to its competition of CoreWeave, it would be trading over $120 per share. CEO Arkady Volozha is the real deal. Nvidia's investment was not out of the blue. They have known the company for a decade and were waiting for complete divestiture from Russia. So much optionality in so many different ways with a fortress balance sheet. You also have Hedgeye that added Nebius Group as a new long idea, estimating it as undervalued by over 40%. Now, what's also very interesting about this company, there's a lot that's interesting about this company, but going forward, one thing that a lot of people want to see is insider ownership, meaning that if you invest in a company, the people running the company have an interest in that company actually doing well. Okay, so it's a good sign to see founders or CEOs, chief financial officers, so on and so forth, having ownership of the company they founded or work at, right? As of right now, the CEO is by far the largest owner of this company. He owns 13.08% of the company. So he has a huge financial interest in how well this company does. He owns almost 31 million shares today. Vladimir is the second largest owner. He owns 10.5 million shares, worth about 4.5% of the company. Now, this individual also works at the company and has been with the company for a long time, back in the Yandex days operating in Russia. The short position currently in this stock is about 4.5% of the free float, and you got about 9 million shares that are currently sold short. But again, this company just started trading, worth over $7 billion with essentially zero analyst coverage. You got one price target of $51. That's it. I mean, there's gonna be people that get on this. It's going to get more attention over the coming months. And I think it's poised to do pretty well. Now, the earnings situation is a little bit tricky since this is essentially a brand new company. It says here, the company reported a significant revenue increase in the third quarter of 2024, with revenue jumping to $43.3 million from $5 million the previous year. So year-over-year growth looks phenomenal. It says here, highlighting strong demand for AI infrastructure. However, this was accompanied by a net loss of $47.3 million, an improvement from the previous year's $86.5 million loss. Here's the deal. In the trailing 12 months, Nebius Group's earnings were $50.7 million. That was down 173% from the last quarter. None of this really matters. I'll show you the one thing that matters. It's looking forward. Nebius Group has projected an annualized revenue run rate between $750 million and $1 billion by the end of 2025. It says here, indicating optimism for future growth. This projection is supported by significant investments in infrastructure, including a $700 million private placement with investors like Nvidia, which also reflects confidence in the company's growth strategy. So if they reach either one of these marks, $750 million in annual revenue run rate, or $1 billion, that puts the stock very cheap for a AI company. Essentially, if you don't strip out the cash, if you consider, let's call it an $8 billion market cap company, it's closer to about $7.5 billion. But still, that means the company would be selling at about 8 times price to sales if they hit $1 billion. So 8 for the price to sales ratio. If you consider even something like Apple, Apple has a price to sales ratio at 9.54. Again, if you look at MongoDB, another stock that I do like, AI software name, has a price to sales ratio of 17.24, almost double what Nebius is at. If you exclude the cash, the price to sales for Nebius is like 5.5. So that would be more than triple the valuation of MongoDB versus Nebius. If you look at, say, Nvidia, they have a price to sales ratio of 37.36, which again, include the cash here, and Nvidia is over 5 times more expensive than Nebius. If you exclude the cash, Nvidia is like 7-8 times more expensive than Nebius. And again, do I think Nebius should trade even close to Nvidia's valuation? No, probably not. But should it trade at such a large gap from other AI stocks? Probably not. The reason that is happening is because Wall Street quite literally does not know about this company yet. Now, what's actually interesting about their competition, CoreWeave is their largest competition. They are targeting a valuation of over $35 billion for their planned initial public offering IPO in 2025. Okay, great. What's their valuation? Well, they did about $2 billion in sales in 2024. So Nebius could be doing about half of that by the end of 2025 at a $7.5 billion valuation. There is a large gap here between valuation. Now, the company expects its revenue to quadruple to approximately $8 billion in 2025. So we'll see how that goes. That would be some crazy growth. And, just the IPO of CoreWeave is probably going to have quite a, beneficial relationship with Nebius. And specifically, CoreWeave is expected to IPO in the second quarter of 2025. So here in just the next couple of months, you could see this company coming live on our markets, which if Nebius has not been found by Wall Street by then, it will likely be, talked about a lot as competition to CoreWeave, which Nebius is really the only other major player as far as competition for CoreWeave. So again, is this a slam dunk stock? Is this a put your life savings in this stock, it's going to 10x tomorrow kind of stock? No, it's more of a long-term idea. It could fail. Obviously, it could fail. Anything can fail on our markets. But especially following the DeepSeek news, when the stock fell 37.5% the next day, I do think it is a very compelling company, not just because it's solely data centers, but because they have AI solutions and software alongside that make it very interesting for the long term. And all of the other factors we've talked about here in this video make it even more compelling. And again, it's $33 per share. It was just in the low 40s. And I do think you're getting a little bit of a discount from that perspective, and a big discount compared to where the valuation could soon be trading at, especially if they hit their or exceed their full year 2025 revenue targets. So from that perspective, I do like the stock. I currently own 350 shares around this price, around $32 per share in one portfolio, and another 150 shares in a different portfolio, bringing the total to almost $20,000 that I've invested in this stock. And I do think over the next couple of years, as long as nothing dramatically negative happens within AI, this could be a, $50+ billion company. But again, no guarantees, not a financial recommendation. Let me know what you think down below in the comment section. I have more work to do evaluating this company. But there was some news in the last 24 hours that may start to catch some attention. And it does have to do with one of the subsidiary companies that Nebius owns, called Avride. They just announced a new partnership with Grubhub to bring its autonomous delivery robots to U.S. college campuses. They say, quote, "Our first fleet of 100 robots is already live at The Ohio State University, providing students with fast, reliable delivery 7 days a week. With Grubhub's reach across 360 campuses and 4.5 million students, this is just the beginning. More campuses are on the way." They say, quote, "We're thrilled to be working with Grubhub to scale this success and expect to see hundreds of our robots serving campuses already in 2025. It says Avride isn't just developing delivery robots, it's also advancing self-driving vehicles similar to Waymo's. Its fleet has already completed over 47,000 passenger rides, covering 22 million autonomous kilometers with 0 serious accidents. The growth trajectory. 2024, there was deployment of 10 to 20 vehicles for R&D and over 100 delivery robots. 2025, expansion to 100 plus autonomous vehicles and 1,000 plus robots with monetization milestones and break even on contribution profit. And 2026, they are targeting unsupervised public launches in multiple cities, targeting double-digit million USD revenues with a fleet size exceeding 200 vehicles and 3,000 robots. They say here, NBS is a sleeping giant. And here's a picture of these robots. You can see from I'm Wheeler on X that he spotted these in Austin, Texas today. These are Avrides already partnered with Uber Eats. So there's already some very fascinating things happening in the subsidiary companies of Nebius as well that should not go unnoticed. Let me know what you guys think about this information down below in the comment section. What is your favorite AI stock to buy right now? Do you think this is a hidden gem, or do you think it is nothing? Let me know your thoughts down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.